This is a demonstration of problem 12.2a in your textbook on page 586. There are two separate net incomes to figure into this problem, the $105,000 and the $180,000. I will only be doing the $180,000 as an example for the demonstration. Dividing partnership income says Morrison and Amato have decided to form a partnership. They have agreed that Morrison is to invest $150,000 and that Amato is to invest $50,000. Morrison is to devote 1/2 time to the business and Amato is to devote full time. The following plans for the division of income are being considered. So using the $180,000 net income of the business, and we shall go through each of these scenarios and determine how much of the net income of $180,000 will be divided to each partner. The thing to remember that no matter how you divide the net income of the actual business into the partners' capital accounts, the total divided between the two partners can never be more than what the total net income is. So in this case, $180,000. Now you will notice this I have over here is just a remainder to show what is left each time that is not on the sheet that you print to follow along with the actual demonstration. So with that, let's get started. Let's start with A, which is equal division, which means the equal division of the net income. That would mean that the net income, otherwise, is shared equally. I have the remainder over here, which is $180,000, and we're only dividing it one way, which is equally. So that means that each partner will divide $90,000 or 1/2 of the $180,000 net income. So the two of these amounts added together, I now add up to $180,000 because I now have a zero here. Under the scenario for B, it says in the ratio of the original investments. If you remember, Morrison invested $150,000 and Amato was to invest $50,000. Well, $50,000 is 1/3 of the total amount that Morrison had invested, and so that would be a 3-to-1 ratio. When you have a ratio of, say, 3-to-1, you add the two numbers together and then you come up with 4, and it would mean that 3/4 of the net income will go to Morrison and 1/4 of the net income will go to Amato. So if I look at Morrison, who gets 3/4 or 75% of the net income allocated to him and to his capital account, that would mean $135,000 is being allocated to Morrison, and the remainder, or $45,000, will be allocated to Amato. You can double check to make sure that this is the correct amount by taking 180,000 times 25%. Now we're going to do C, which is in the ratio of time devoted to the business. Morrison will devote 1/2 time, where Amato will devote full time. Full time is 2/2 times, so that would be a ratio of 2-to-1. So again, add them together, you get 3, which means we're now going to divide the net income by 1/3 to Morrison and 2/3 to Amato. So if I was to divide the $180,000 by 3, that would be 1/3, or 60,000 goes to Morrison, and 120,000 goes to Amato. And I have nothing left from the 180,000 because the two amounts add up to 180,000. D says interest of 12% on original investment and the remainder divided equally. So when it says an interest of 12% on the original investment, it just means that we will take 12% times the original amounts that they invested, and we will allocate the net income partially that way. What is left over out of the 180,000 will then be divided equally. So if you remember, Morrison invested $150,000, and so $150,000 times 12% would be $18,000 allocated as the interest allowance to Morrison. For Amato, who has an original investment of $50,000, would be a $6,000 interest allowance allocated to Amato. If you look, the $18,000 subtracted from the $180,000 along with the $6,000 subtracted from the $180,000 leaves me with a balance of $156,000 that needs to be divided equally. So that would mean $78,000 more allocated to each partners. And before you move on to the next scenario, we need to add up the two columns here of what's being allocated to the partners, and then make sure that those two amounts added together will add up to $180,000. When I add $78,000 to $18,000, that gives me $96,000. When I add $78,000 to $6,000, it gives me $84,000. And when those two amounts are added together, it does add up to $180,000, which again is the net income. Now scenario E, interest of 12% on original investment, salary allowances of $30,000 to Morrison and $64,000 to Amato, and then if there is any net income left over, the remainder is divided equally. So we have the interest allowance, a salary allowance, and then the net income remainder allocated equally. The interest allowance is still the same 12% of original investment, so that is $18,000 allocated to Morrison and $6,000 allocated to Amato. The salary allowance is $30,000 to Morrison and $64,000 to Amato. So again, if we take $18,000 plus $6,000 plus $30,000 plus $64,000 and then subtract all of that from $180,000, we are left with $62,000 to be allocated equally, which would mean 1/2 to each. 1/2 of $62,000 would be $31,000. Now we have allocated the amounts, we need to go back to double check ourselves, add each column up, and then make sure the amounts that are being allocated to the partners do not add up to more than the $180,000 net income. So Morrison's allocations add up to $79,000. Amato's allocations add up to $101,000. Those two amounts added together come up to $180,000. And finally, the last scenario, which is F, it states Plan E, which of course would be interest of 12% on original investment, salary allowances of $30,000 to Morris and $64,000 to Amato, and the remainder divided equally, but that will also be after Amato is allowed a bonus equal to 20% of the amount by which net income exceeds the total salary allowance. So we have the interest allowance of 12% on the original investment, we have the salary allowance, and then we have that bonus allowance of income over total salary allowance, and then we have the net income, if any, left to be divided equally. Again, the interest allowance should be the same, $18,000 to Morrison and $6,000 to Amato. The salary allowances are the same, which is $30,000 to Morrison, $64,000 to Amato. The bonus allowance of the income over total salary, which goes to Amato, would be figured in this way. The net income was $180,000. The total of the two salary allowances added together is $94,000. The $180,000 is definitely more than $94,000, so we need to find the difference. This leaves $86,000 of which the bonus allowance is to be figured on, and the bonus was to be paid at 20% for any amount that exceeded the salary allowance. This amount would be $17,200 allocated to Amato. Now, after allocating $18,000 in interest to Morrison, a $30,000 salary allowance to Morrison, a $6,000 interest allowance to Amato, a $64,000 salary allowance to Amato, and the $17,200 bonus to Amato, all of those added together and subtracted from $180,000 leaves me with $44,800, which must be divided equally. And $44,800 divided by 2 would be $22,400. Now the final thing we need to do to finish would be to add each of the columns up, then add the amounts being allocated, and make sure that they do not add up to more than $180,000. Morrison's allocation adds up to $70,400. Amato's allocation adds up to $109,600. And if you add those two numbers together, you get a total of $180,000. Now, I want to point out that under each of these scenarios, what we are trying to determine is how much of the net income will be closed into each partner's account. If we look at this last scenario, it means that we will debit income summary for $180,000. We will credit Morrison's capital for $70,400, and we will credit Amato's capital for $109,600. And that is the end of the demonstration.